Hello everyone, welcome to my channel DhiEarth. Today we are going to discuss various standards and how they're different from each other. So we'll be comparing BRSR, IFRS, TCFD, ESRS and SASB standards based on various parameters. So these parameters are listed on the left side. So these parameters are objective, scope of reporting, whether the standard is mandatory or voluntary, what are the key disclosures, what are the key relevant stakeholders, and how these standards are integrated with the financials, what are the regulators which have mandated these standards, and the global applicability of these standards. So let's look at one by one. So we'll first discuss the objective of all these standards. Objective of BRSR is to foster sustainable business practices in India, and for TCFD it is for companies to disclose climate related financial and disclosures and opportunities. And IFRS aim to create a global baseline for sustainability reporting and integrating financial and sustainability information. And ESRS is European Sustainability Reporting Standard, and its objective is to comply with CSRD, supporting sustainability, transparency and comparability in the European Union. The objective of SASB is to offer industry-specific sustainability standards, and its focus is on financial materiality. So these are the objectives of all these standards. Now let's look at the scope of reporting. So what it covers. BRSR covers ESG topics. If you look at BRSR, then there are three segments, section A, section B and section C. And in section C, there are 9 principles. So it is the coverage of the BRSR. TCFD covers primarily 4 areas, and the focus is on encouraging companies to disclose climate risk and their impact. IFRS covers basically 2 standards, S1 and S2. S2 is the climate related information. ESRS has total 12 ESG related specific guidance, and it also emphasizes on TCFD requirements, and it also covers the double materiality concept. SASB provides standards for 77 industries, focusing on financial material ESG topics for each sector. Now let's look at the requirements, like whether it is voluntary or mandatory. You might be aware that BRSR is mandatory for top 1000 listed companies in India by market cap. TCFD is voluntary but increasingly adopted by companies worldwide due to investor and regulatory pressure. IFRS is also voluntary but likely to become a global standard for sustainability reporting. ESRS is mandatory for some EU companies, and the criteria I have covered in my previous video, which is on ESRS. SASB is also voluntary but increasingly adopted, especially in US and Europe. So among these 5 standards, BRSR and ESRS are the mandatory ones. Now let's look at the key disclosures. So BRSR covers 9 principles. So companies have to disclose on those 9 principles. There are various indicators like essential indicators and leadership indicators. TCFD covers 4 major areas like governance, strategy, risk management, metrics and targets. So I also covered all these 4 areas in TCFD video. IFRS S1 covers general sustainability related disclosures, and IFRS S2 provide climate specific guidance on risk and opportunities. As we discussed, ESRS has 12 standards, basically for environment, social and governance. And SASB has industry specific metrics across ESG factors. So these are the key disclosures which are required under these standards. Now let's look at the stakeholders. So BRSR primarily is evolved from the regulator SEBI, and TCFD is demanded by global investors, and IFRS is also again by investors, stakeholders and regulators. ESRS is mandated by EU regulators, and also it is helpful to investors and companies. SASB is again demanded by investors and other stakeholders. Now let's understand how we can integrate the requirements of the standards with the financials. So as such, BRSR is separate from financial reports, but it aligns with the India's corporate governance requirements. So you might have looked at the CSR requirements, which is kind of aligned with the financials, but not the mandatory financial alignment of the BRSR with the other frameworks. So if you look at TCFD, then it encourages integrating climate risk into financial reporting. So basically the objective of this TCFD standard is to quantify your financial risk. IFRS is again kind of similar with TCFD. So it directly links with financial reporting for an integrated view of financial and sustainability impacts. If you look at ESRS, then it is aligned with CSRD for integration with financials, and you might be aware that it also mandates TCFD related reporting. So basically 4 key areas which are there in TCFD are also mandated in ESRS. And SASB again provides financial matrix kind of sort of parameters for each sector, so which are financially material for that sector, and it is linked to the ESG factors for financial performance. So this is all about integration with financials for these standards. Now let's look at the regulatory backing. So BRSR is mandated by SEBI. SEBI is the regulator in India. TCFD is voluntary but widely encouraged by investors, and IFRS standard is adopted in 140 plus countries. And ESRS is again backed by CSRD with the help of EFRAG. It was notified. And SASB is voluntary though widely accepted among investors. If we look at its global applicability, then BRSR is primarily relevant to India, though it aligned with global standards, and TCFD is global adoption, like globally it is accepted by so many companies and they're reporting on it. IFRS is used in over 140 countries. ESR is primarily applicable in the UA, but it might have influence on global standards due to the EU's regulatory influence. You might be aware about the EU taxonomy. So that is the again relevance of this ESRS. And SASB primarily used in the US and Europe. So thank you guys for watching this video. See you soon.